Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues its bearish bias and cracks the level of 17.90, which was respected just recently in December. Nevertheless, from the break, now gives further guidance to the downside and could be looking towards a region of 69, 65, 75 and reassess from there. Still, with the US dollar still rallying since the post-Fed, the market will continue to probe the downside as anticipated, as the ADX is trending and the RSI is married up to the MACD. Looking at the euro, the market is heading very much to the 112 level and still has in sight the broader objective, which is around 111 figure 50. As widely expected, the Federal Reserve kept its interest rates unchanged between 0 to 0.25, but signalled, however, an interest rate hike could be coming soon. Jerome Powell, the US Federal Chairman, speaking in a news conference after the end of the two-day monetary policy meeting, said that the central bank's rates setting committee is ready to raise rates at its mid-March meeting. This has put a bit of a spur on the US dollar and now weighing heavily on the euro, but overall, from a technical point, not fundamental, the downside target still remains at 111 figure 50 and reassess from there. The dollar yen surges after rebounding off that break of the downtrend and now holds to an objective seen at 115 figure 5 and reassess from there. In light of the pattern, keep an eye on the MACD because it is strengthening and could see this rise, maybe extending to 115.90. But let's take one step and see if we reach 115 first of all. Sterling refreshes its lows around 134.60 and still holds relatively weak. In light of the pattern, we are oversold and maintaining a broader picture for a rebound. This holds unless we see a break of 134.10, as this would leave me neutral. KGN still a little bit whipsaw, but nevertheless I would say from the given pattern could see a return to the lows around 89.60, 80 and reassess due to the technicals breaking down, especially with the RSI. Finally, gold has succumbed to further bearishness as the market plummets now towards the 1,800 mark and still may even have 1,788 as a potential target. In light of the pattern, it's very much married up to a negative case, so let's see if it continues. And wrapping up with oil, the markets return back to the October 2014 highs, but it does give us a bit of a question with this bearish divergence if the market can sustain. In the broader sense, $81 to around $88.90 as a near-term cap may actually see the bears return. So I'm in favour of seeing a pullback, but let's see how strong the bears can move this market, as we did get a rejection recently of that midway point. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.